The markets were heavily influenced today by a suggestion that OPEC will cut its oil production by 1 million barrels a day. So let's bring in here Vivek Dhar, Director of Mining and Energy Commodities Research at the Commonwealth Bank. Vivek, as always, thanks for your time. Oil prices jumped today on this suggestion of production cuts, but the oil price, of course, is down more than 30% from its peaks back in early June. And all this, of course, has to be viewed through the prism of Russia and Ukraine.
Certainly. Like when we talk about these OPEC Plus cuts, it really signals a change in policy from what OPEC is trying to do. Keep in mind, for the better part of this year, they've been increasing their production quota. And now we're seeing them reverse that because of just how much demand has slowed down and how much the expected demand is expected to slow into 2023. So we're seeing a certain pivot coming from OPEC Plus. But before we get carried away with just what impact this has on the market, I'd first have to say that if you look at this, at how much OPEC Plus are producing relative to their quota, there's some 3.5 million barrels a day below what their quota production suggests. So even if they cut by 1 million barrels a day, the question I have is how much will this actually impact the physical market? So this is more a signal of intention. On the physical side, we're not going to see this impact come through materially, just given the fact that they're underproducing what they promised for months now.
OK, so then take me to that lack of demand. That's coming as a result of economic slowdowns around the world. And so this is part of the mixture that we're seeing that has seen this very steep fall in the price of oil. It's also the expectation of what's happening if the world does go into a recession.
That's right. The main driver of weaker prices has been the fact that the world is now considering a recession. And we're seeing pressures build in the US, in Europe, around the world, particularly in developing and emerging economies. So this story that is happening, and it's not just oil, it's hitting mining commodities as well. It is very much a demand problem, and it is synchronized across all the major economies. So right now, that's the main trigger that we're seeing. But the one thing that I'd say with oil to keep in mind is that it's not all demand, and there are supply issues to watch for. And in particular, what is going to be the impact of EU sanctions later this year? So December 5 is shaping up to be a big date because we're going to see the EU implement a ban on seaborne imports of Russian crude oil. And next year, 5th of February, we're going to see a similar ban on Russian refined product imports. But these EU sanctions and how they play out are really critical, because if we do see a supply disruption take place, we could see oil prices lift. And this is something that we are baking into our forecast, that we think Brent could lift to $100 a barrel because of supply side impacts of EU sanctions. And that is something we're watching very closely. But the question is that will this overturn kind of these concerns around demand? And I think that's really the big question for oil markets over the next 3 to 6 months.
OK, so Vivek, I thought there was already an effective ban on Russian oil, not a physical ban, but an effective ban because of the ban on financial products and insurance products. And so therefore, to be able to get a shipment of oil out of Russia was very difficult because of the ban on those financial products.
Look, those challenges have been there, particularly in March when we first saw the first round of sanctions from the EU. But the actual ban on shipping and insurance is one that is slated to come in 5th of December. And that is something we're watching very, very closely. So that's why the market is really trying to understand just how much that insurance market is impacted. Because if you looked at what is being implemented right now, it's very hairy in that it's not clear how this will all play out. For instance, shipping wasn't included, but insurance was included. So when you look at that impact alone, if we see EU sanctions come in and there's no relief on the insurance measure, we could see 4 to 4.5% of global supply impacted purely because we cannot send that outside of Russia. And that is going to be very problematic. And this is what the market is contending with, is figuring out what impact this will have. And that's why there's so much uncertainty with oil prices come the fourth quarter of this year.
And of course, that all just plays straight into the global inflation story, which is therefore the setting for central banks around the world. So it's going to be fascinating just to see how the inflation story goes along with this energy story. Vivek Dhar from the Commonwealth Bank, commodity specialist with them. Many thanks for your time as always.